Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we are going to look at Parker Hannifin Corporation, ticker PH. This one came in by request down in the comments section of one of my other videos a while back, and I'm just now getting used to it. My blackboard behind me, or getting to it, the blackboard behind me is getting filled up with tickers now. I think I responded to everybody that asked for one in the past few days that I hadn't gotten back to. And I have those tickers up, so eventually I will get to them. Okay, as always, this is not individual investing advice. This is just how I analyze stocks. I thought I had covered this one in the past, but I had just filled a request for a member of the Cyclical Investors Club back a couple years ago. So let's take a look at it. The first thing we should always take a look at is the historical earnings cyclicality. So if we look on the fast graph, let's actually just go pre-pandemic here and see where we're at. Okay, I think this gives a little bit better picture. So during the Great Recession, earnings fell 44% off their highs. We also have a 16% drawdown in 2013. Another 11% drawdown in 2016. And then just generally during this period from, I would say, going into the Great Recession until about 2017, growth was pretty weak. These guys do, so this isn't quite enough to, it's right on the borderline of being a deep cyclical. But because of the industry that like 50% is usually where I draw the line. But because they're in like industrial machinery and things like that, they're very much connected to like the industrial economy. I have treated this one as a deep cyclical business, partly because if you look at the PE going into the Great Recession at only a 15, it wasn't very overvalued or very richly valued. And the stock price sold off over 65%, about 67% or so. And so that trades like a deep cyclical stock, basically. So because it's in a cyclical industry, generally speaking, and because the stock price behaved like a cyclical stock when it started with not a very high valuation and then fell so much, earnings fell close to what I would consider deeply cyclical. That's why I chose to treat this one like a deep cyclical, but I'm also going to show what the valuation would look like using the time until payback if we just kind of take the big cyclicality out of it, and I'll take into account maybe these couple years, but not like a huge decline like the Great Recession. So I would say if we're not in like these little industry, not even little, but significant industry decline, like industrial declines, like we had an industrial recession kind of around 2015 or so, they have definitely affect these guys' earnings, but not as much as somebody that's really focused on a specific industry that gets directly hit by an economic downturn in that specific industry. These guys look like they're diversified enough that they're sensitive to that, but not as their earnings aren't going to fluctuate as much, probably because they have more diversity, is my guess. So if we go to the description of the business from Chat GPT, you can see they're in motion and control systems, which is like hydraulics, pneumatics, electromechanical stuff, aerospace systems, again, more hydraulics, fuel systems, filtration, sealing and shielding, right? So pretty wide variety of things that these type of businesses can be used for. And they aren't all like super cyclical. I would say just a little bit, right? So they are economically sensitive, but maybe not as much as a standard industrial business might be. All right. Overall, I like this business. Overall, the trend of earnings is up, even though they had a little bit of a weak period. If you can buy this when it's pretty cheap, I would have no problem like picking this stock up. Now, the problem we have here is that the current PE is 20 over 25, a little bit over 25. Get this out of the way. Hopefully I can. Come on now. Not going to let me. I'm just going to reload this real quick because I accidentally clicked at the very end of the line chart and then it won't let me do anything. Or at least I don't know how to change it after that. Okay, so what I want to do here is get an idea of what kind of earnings growth we had. And I'm going to go back kind of here or so, I think. Yeah, this is the period I want to use. So this goes right up till today. Now remember, we have had like 20% inflation since the Great Recession. So that's going to push up some of these growth rates, but they were pretty strong overall still. And the average earnings growth was 10%. That doesn't take into account these little downturns here. They also bought back about 7% of the shares outstanding. So I think, but more recently, the growth has been faster. So I think this 10.33% or right around 10% earnings growth is a fair estimate to use going forward. And it will go through periods where it's slow, like in the mid-teens, and then periods where it's faster, like recently. This year, it's only expected to grow 5%. So that's how I would kind of come up with a decent earnings growth rate. Fast graphs is good to just get those rough estimates. Now, because I've been treating this as a deep cyclical before I went to make this video, I didn't have an earnings growth rate for it because I don't use earnings for deep cyclicals, but I'm going to do both in this video. So we can look at it from a couple different angles and go from there. So let's look at it as a deep cyclical first. That's the link to the old YouTube video that I made. Okay, so these are just from my quick notes, but I think they're pretty accurate. So the 2021 drawdown, they only drew down 45%. This is the stock price. That doesn't surprise me very much because these type of businesses didn't get bid up as much during the dot-com boom. And so you actually could have gotten a really great deal if you would have bought it probably back then. But it still drew down 45% during that drawdown. And then in 2008, I just showed the 67% drawdown. What's interesting is in March of 2020, the stock fell almost 55%. That tells me the market probably hasn't changed its mind about how cyclical this business is for when the market only fell like 30%, like it's falling almost at double the rate, maybe not quite double the rate, 2/3 of the rate that the wider market fell. And I don't think it was super overpriced. Let's look. Well, it had started. Yeah, so their fiscal years run mid-year. So this incorporated part of this earnings decline incorporated part of the beginning of the pandemic because it ran through June. But we can see in February, it was looking at like a 19 PE, still quite a bit cheaper than where it trades today, like 25% cheaper. And so going in it with a 19, it fell that 55, almost 55%. We'll call it 50%. So yeah, you can see it was 212 at the peak. And then that was the peak going into the year. It might have made another slightly higher peak. And then it fell all the way down to 101. So a little over 50% in like a month. So that lets me know that if things turn poorly, the market kind of gets jittery about the economy, the stock price could fall a lot. And given that this was, we'll call it a 20 PE, and now we're at a 25, we're not set up any more conservative going into any potential downturn. And it could be one of those things where maybe this isn't the peak, but maybe it kind of starts to go down or moderates for a while, for a couple of years, doesn't really get too much higher, and then there's a downturn, right? And then the stock price falls. So it can be one of those slow, so here's a good example. Let's say you bought here. This is probably somewhat similar to where we're at now. This was actually an industrial stock peak. I wrote about a bunch of them. I didn't write about this one, but in January 2018, that's when I started doing this full time. And I got the Cyclical Investors Club name because cyclicals are what I chose to focus on, and I developed a specific strategy for cyclicals. And I wrote about a bunch of them: Caterpillar, John Deere, 3M, a bunch of the big ones, and they all peaked at this exact same time. Most of them fell farther than Parker Hannifin over the next year or two. But you can see that that was a peak that was, I would say that they were overvalued at this time. I wrote a bunch of sell articles on them, but it never quite recovered that. I don't think. Oh, maybe barely. Maybe barely. So that was 2012. It came right back to the same peak, essentially, right before the March decline. And so it fell 50% basically off that 2018 high. But look how long it took, right? This is exactly basically what I just described. If you buy during that peak, your price is underwater for 2 years, okay? And then you have the decline that comes, right? 3 years later. So you're waiting like 2 years or something, so you can lose 50%. And then it probably took another year. Yeah, I mean, it took basically 3 years just to get back to even. And that was with all the stimulus and everything that we put into the economy. So this type of stock can be kind of sneaky dangerous if you're buying it around these levels. If I owned it, I'd probably take profits. I mean, I would take at least half. I mean, if it was me, and then I'd have to think a little longer about what to do with the other half. It is a quality company, so if you did buy it, if you're one of the people that bought it back here or whatever, and you don't want to sell it now and you just want to hold it, I totally get that. At some point, you might say, look, I'm not even going to pick the bottom here. I'm just going to pick a random spot, and it's up 1,500%. So you got, over a 10 bagger. Even if you bought it probably even here, you probably still do, right? So now if I was doing like regular portfolio management and I had a stock like this, if you had a year where you had some losses, you could trim a little bit just to reduce some of the tax burden and things like that. That's how you would end up kind of managing something like this, where it's high quality, but you also know it could reduce in value a lot or take a long time and just kind of do nothing. That's kind of the situation that I see the stock in now. But if I was going to buy it, if we go back to as a deep cyclical, I would be looking at about $350 a share, almost 50% lower than where it's at now. 50%, I almost changed this to a deeper buy price, but I think we've had enough inflation now that by the time the next downturn comes or whatever, the base, of how far it might drop might be a little higher. Because given the high valuation of 25 PE, especially for a cyclical like this, it could fall farther than it did normally in the past. So yeah, I mean, if I was a long-term holder, I'd just kind of be lightening up. I wouldn't be panicking or anything. If I had recently bought it, a couple years ago, I'd probably sell at least half, maybe the whole thing, depending on how my portfolio looks. I have a ton of cash right now, so I probably wouldn't sell the whole position because it's high quality. And maybe you don't want to pay the taxes if it's in a taxable account, so I get that. All right, so now let's look at time until payback. So this would be how long it would take to earn your, if you bought the whole business for $100, to earn $100 back from earnings. And I didn't hide how long it would take. Spoiler, 14 years. But the assumption that this uses is a 10% earnings growth, which we saw during that period. It was like 10.33% that I outlined earlier. But if we look at just what the analysts expect the next couple of years, it's like 5% this year. We're like halfway through, and then 10% the next couple of years. Analysts are thinking like 10% too. So I think if you're just trying to get a ballpark number, that's pretty good. The average S&P 500 valuation now is about 15-year time until payback. Lower is better. You want to earn your money back faster. For a mature business, for a somewhat cyclical business like this, I want to see this more like 10. I probably wouldn't use this. I really wouldn't use this method to try to value it. I would try to get it during a downturn. But if you're not in the business of caring about recessions and you're like, hey, it'll come back, I just want to get a quality business at a decent price, then I would want this to be 10. Let me see what price that. I'll see what price that would be. What did I say on my other one? 350. Let's see if it's similar. Yeah, it's gonna be a little higher. There we go. It's still the same ballpark. Yeah, like it's almost the same actually. I didn't plan that. Why is it doing that? Just trying to get it back. There we go. All right, it's not going to do it for me. Maybe. There we go. I think I got it back somewhere close to where their actual price is. So yeah, it looks like, 350, 360 would be where I'd be aiming to buy it, no matter what kind of did I say 3? It's 2. Let me look at my other chart. I think I might have misspoke. No, 350. Man, it's gone up a lot. So, okay, so that might sound a little high, but it was enough to make me double check it. I mean, just 2.5 years ago, it was at 250. It was basically at that price less than 2 years ago. So easily could get down there. Easily. If they disappoint on earnings like this year, like halfway through the year or starting going into next year, it could easily be down there. So, all right. Hopefully that helps. If you're interested, I have weekly picks. If it looks like I never buy anything and I say I only buy things when they're 50% lower than what they are right now, I have a weekly pick over on Patreon for $25 a month. They've been doing really well. I started that last October, and I'm pretty happy with how all that is turning out. So if you want to check that out on Patreon, that's great. I have a free tier on Patreon. If you want to get all these same videos that I post here, you don't want to rely on like the YouTube algorithm and everything. All the videos I post on YouTube, I also post on the free tier. And what else? I guess that's it for now. Thanks for watching. I'll see everybody later.